Hey guys, welcome back. You're still tuned into Trading Hour on CNBC-TV18. And just a while ago, we were talking about how this year so far, that's in January so far, we have seen India underperforming a lot of the global markets. So Surbhi is standing by at the big wall to tell us about some interesting data on how overall global risk appetite is looking and what it really could mean for India in this context. So Surbhi, it's over to you.
Well, thank you so much for that. Yes, I've been looking at some numbers to see if this elusive pre-budget rally will start or not. Now, there's one thing that January 2023 seems to be confirming. It is that global risk appetite is well and truly back, no matter all the talk of recession, central banks, inflation, and so much more. Now, here is some interesting evidence that's supporting that. Four very simple and clear points. I'll start first with what global markets are doing. And global markets have been surging. Almost all key indices, whether you're looking at the Americas or Europe or even Asia, markets have been going higher. I mean, look at this. We've got a 4% surge on the S&P already in recovery mode. And some of the markets in Europe have done really well. Some of the Asian markets with China's reopening also doing very well. Now, it is not just equities. The crypto market has stirred back into action in 2023. And how? Look at these numbers. 39% on Bitcoin in January. I just wanted to put that figure up there in case you missed it. You're talking 35 to 36% on Ethereum as well. So when the crypto market is stirring, you know that risk appetite is back. Now, this is not enough. Let's get to tech. There is buying returning to big tech after the 2022 chaos. The Nasdaq, as the previous graphic illustrated, is up over 7% in January. In comparison, the Dow is up less than 1%. What does that tell you? Even in the mother market, where's the money going? It's going to technology. People are looking to snap up bargains. Now, consider the market's reaction to apparent bad tech news. Investors are choosing to buy into stocks rather than sell any further. Take Alphabet and Netflix as examples. Now, Alphabet was up 5%, a little over 5%, on the day that Google actually announced 12,000 layoffs, citing a challenging economic environment. So investors are choosing to read it very differently. In fact, investors lapped up Netflix shares, choosing to focus on the beat in monthly subscriber additions. That was a big beat number, by the way, over 7.5 million over there, instead of the big EPS miss. So it's just the way people are analyzing numbers now. If you need any more evidence that risk appetite is back around the world, let's take a look at the mother of all fear gauges, and that's the US dollar, which is what investors typically rush to in times of uncertainty. Now, after a massive 6-month surge, the dollar rally has certainly paused. In fact, in January, it's down. The dollar index is down about 1.5%. Okay, so we're convinced that the global risk appetite is back. But what does this mean for India? Well, not much, at least up until now, unfortunately. And that's perhaps due to the fact that we had a superior performance in 2022. We were one of the best performing markets in the world. And the fact that China has reopened, prompting a shift of money to that market. We all know these stats. We are underperformers here, not by a huge distance, but the fact is we're in the red for the month of January, underperforming most key global indices. Also, something to note, foreign investors have gone back into selling mode after the buying that we saw in November and December. This month, we are down by about 15,000 odd crores. This is not to say that domestic institutional investors don't make up for it. We know the retail buying that can completely set aside the foreign selling. That's what 2022 was all about. Very quickly, let's now take a look at what January typically does. I mean, history doesn't always repeat, but it rhymes, they say. So I looked at the last 5 years. It's only in January of 2018 that we actually had a great Jan rally, almost 5% higher. The rest of the 4 years, we're flat to mildly negative. So will 2023 be any different? We only have a couple of days to the budget to see if the track record moves back to the green side.
All right, Surbhi, thanks a lot for getting us that very interesting data. It will be interesting, to see how the rest of the 6 trading sessions pan out. Like you were pointing out, we just have 6 sessions until the budget. So, it will be interesting to see how that looks for us. But with that, we're going to get into a short break on the show. When we come back, there's lots more market action and talk lined up for you. We will also be speaking with Abhisar Jain, Head and Fund Manager at Monarch on the other side.